Okay, yes, rates are falling. I get it. I look everywhere on the internet, on the news, on YouTube, you name it. Everyone's like, oh my God, rates are falling. But what does that mean? I want to share with you, show you a way that I look at it as a lender. And I think this is a better way to think about rates as far as how it impacts both people in the real estate and mortgage industry or you as a buyer or seller. And then on top of that, I want to show this chart on who's in control. Is it buyers or is it sellers? And see kind of what direction the market is headed. Because look, it's no secret, rates are going to fall. That's getting priced into the market. But how's that all going to play out over the next year and a half? Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And yes, rates are going to fall. So let's look at where they're at now, because they're the star of the show, really everything I see online as far as mortgage and real estate news. So right now, rates are 6.43% compared to Mortgage News Daily. Remember, everyone's rate's different. You could get a better rate, lower rate, depending on credit, how much you put down. But I like to look at the trend, and the trend is 100% obviously down. But we've really kind of got this new equilibrium right here at about 6.5%, which means that right now the Fed is meeting in September, I believe September 17th. The market is already priced in a quarter. So when you see that drop that the Fed does on the Fed funds rate, remember they're not directly lowering interest rates, you may not get a big change in rates. The big change is going to come in the meeting after, where they're going to indicate what's going to happen, going forward. And depending on their tone, whether they're dovish or hawkish, is going to dictate what the market does after that meeting. Now, it's also fair to say, and I like to mention my biases, in the stock market, there's bulls or bears. Bears always predicting the market to go down. Bulls always predicting the market to go up. The real estate market isn't like the stock market. It doesn't move that way. It's not even really a good analogy, other than the fact that there are people always predicting big market corrections, big market changes. And even some of the people that, kind of herald themselves as, hey, we got this prediction right in 2006, 7, and 8 when the market really turned over in the Great Recession. But when you look at their history, they're always predicting a market crash. What do they say? A broken clock is right two times a day. So I do tend to ride on the side of real estate market tends to increase over time, and to really say otherwise doesn't make sense. But those changes do happen. If we get enough inventory, we will get that, get that correction. Rates got to 8%, demand completely got crushed, and we really didn't see that. Now, let's dig further into rates. Now, the as far as pending home sales, that came out in July. That's signed contracts on existing homes. They dropped 5.5%. That number was supposed to be flat, so we actually got a surprise to the downside. But that makes sense to me, because even rates falling, that's a leading change, right? Leading indicator. As rates fall, it takes a while for buyers to come in and take advantage of it, find a home, and go under contract. So really be interested to see how this plays out over the next few months, and that'll be a good indication of, are rates changing the market? All right, so we know rates are going down, but how do I look at it as a lender in the market, pre-approving clients, figuring out buying power of people, and myself actually being a buyer of real estate as a real estate investor? And so most people look at it as, yes, if we look at a $400,000 loan amount, to keep it simple, if rates drop 1%, it's about a $257 difference. So obviously you are now saving $257 less than you would have paid for that exact same house. How I like to think about it is this: the $257 savings actually means that same person now qualifies for $40,000 more in a mortgage payment. So said otherwise, they were qualified for a $360,000 house. Now they're qualified for a $400,000 house. You've increased their buying power, and now all of a sudden people are able to buy more home for the same money. Also, I like to look at it as, there are people that I talk to get pre-approved, they're capped out at a certain amount, they go look at houses, and then they actually can't find anything that meets their needs. Well, now that buyer that was looking at $260 can all of a sudden buy at $300,000. So lower rates, just obviously it means a lower payment, but it means people get more excited about buying a home because now they can buy more house. And people that couldn't find a home, it pushes them into the market. And it also takes people that didn't qualify at all and makes them be able to qualify to be able to get into the housing market. Because obviously the thing that's stopping people is affordability, and other than prices coming down, which doesn't look like a great chance based on all the data, at least not right now. The best way that's likely to happen is obviously payments are going to fall. Imagine doubling that, where rates were all of a sudden 4.5%, and now that person, instead of buying a $300,000 house, can buy almost a $400,000 house. So it makes a huge difference on affordability. And if you look at the Fed projections, we could definitely get rates under 5%. Grant Cardone was saying rates could get to 4%. Everybody has different predictions. We don't know for sure, but the trend is down. So we want to dig deeper into see how the recent mortgage dip has impacted the market. This is an interesting article that I found. And so one thing they say right off the bat, and I want to make sure I'm clear on my position, is that rates have dropped from 7.5, they're saying to 6.37 is an average right now. So, but the impact has only been marginal. And when you look at mortgage purchase application index, meaning how many people are making application for mortgages, you can see it really hasn't impacted at all. But again, that doesn't surprise me because rates are a leading indicator, and this will show up over the next few months. I really like the statement here from, I believe this is from Zonda's chief economist. It appears a deflationary-like mindset has taken control over some home shoppers. Builders report reasonable traffic levels, but many prospective buyers are saying, I know rates are coming down, so I'll wait. Barring a significant improvement in housing affordability, the recovery in existing home sales is likely to be slow, a grind. High switching costs continue to suppress resale turnover as elevated mortgage rates compared to pre-2022 levels have made the prospect of trading a lower home monthly payment for a substantially higher one a daunting financial challenge. And this is what I've been saying for almost 2 years, is that one, as rates fall, it releases buyers that are saying, we're waiting. Eventually they quit waiting, and all of that demand is just getting pushed forward. You also have pent up supply, meaning at a certain point when rates fall, I'm going to call it anything under 5%, more and more people with those lower rates finally say, yeah, we got to get more bedrooms. We got to move closer to work. People that have already would have moved, now they start moving. All of those home sellers become home buyers. And that's likely the way the market is to play out, but nobody knows how fast that will happen. I believe it will be more of like a slow grind, meaning we are not going to get this mass influx of buyers to where it's going to drastically change the market. And I also think we're not going to get a massive amount of supply to get a major price correction. So we are going to kind of see this slow grind of rates falling, buyers entering into the market, and then supply trickling in until it gets to a certain point, which releases a lot more supply, but those people also become buyers. We shall see. No one has a crystal ball. Mine's still broken in the shop, but that's likely the way the market is to play out over the next 1, 2, or 3 years. And with that, this is a graph about home sellers and where they have the most power and where the buyers have most power. When we skip down to Florida, well, look at this. In the Northeast, the buyers still outnumber the sellers 80%. But in Northern Florida and Southern Florida, it's 21 to 29% where the buyers still outnumber the sellers. But look at this, 54% of sellers outnumber the buyers, meaning it is definitely shifting in some markets into more of a buyer's market, and this is kind of where they equal out. And that's a big change that's happened over the last few years. It's definitely with higher rates, we've gotten more inventory, but we will see as rates fall, that will, in my opinion, will start to even out. And remember, your local market's different. Even in markets that are slower, there are subdivisions that are red hot in that particular market. And as promised, I want to show you this graph that really made a huge difference when I got in the mortgage business and started building my business, my mortgage loan originator career, and then built a mortgage broker business. But one, and I think this is true anywhere in life, but if you can find what you love, what makes you money, and what you're good at, and spend your time doing that, that's a win. And if you build a daily success plan around doing those activities, for me, I'm on the phone a lot. I do a lot of presentations and meetings, and I really like to sit down with agents and other people in the market and show them strategies and actually brainstorm with them on how to get more business. I've learned a ton from that, and really being around people that are up to big things is really a great way that I built my business. If you ever thought, hey, how do I build a daily success plan? Reach out to me. I'd love to help. this is your update for this week. I think there's a lot more changes to come between now and the end of the year, so we're definitely going to pay attention to all of it. As more information becomes available that moves the market, as always, I'm going to cover it right here. Have a great day, great week, and I'll talk to you soon.